Hi, we're here at the Global India Business Meeting 2014 in Liverpool, and the sentiment has been very upbeat about the new government. Everybody's looking extremely positive and willing to give the government the best benefit of the doubt. And I'm very happy to welcome a very eminent group of guests today where we want to speak about capital reform. Here is Ashish Chauhan, who's the Managing Director and CEO of the Bombay Stock Exchange. This gentleman in the middle almost is Sanjay Kureja, the Managing Director of Chris Capital, and the gentleman on the very right is Amit Dev Mehta, who is the Senior Vice President of Tata Capital. To just enter this discussion very broadly is, after the new government is in place, where do you expect the biggest hotspots where capital reform should take place, and whoever likes to start?
The first and foremost is in terms of getting the approvals done for the project so that the capital can actually start flowing, because if you don't have the projects moving, then the capital sort of formation becomes difficult. But in terms of making the capital formation easier, I think some steps have already been taken in terms of getting the foreign portfolio investment regulations in place, so that earlier for almost 22 years in India, if you were a foreigner and a person of foreign origin, if you are to invest in India, it would be basically you'll have to invest through something called FII, foreign institutional investor. From June 1 this year onwards, that's a few days back, basically you can invest as a normal individual also, and that is basically a huge change going forward. So there are many such changes. In fact, the top 200 companies have been allowed to come with the offer for sale, that's follow-on offers through the exchange automated mechanism, which gets the companies 2 days, the money in 2 days, and the stocks in people's depository accounts in 2 days. So there are many changes that have already been put afoot, and I think going forward there is more we can expect in the capital market itself.
From your perspective, do you see those areas? Do you see other areas that you would like to add?
No, so I would say that, look, the capital markets in India by and large been shut for the last 2 years. There have been very few IPOs. Lots of, if you look from a private equity lens, in India over the last 6 or 7 years, you've had about $60-70 billion of private equity capital flow in, and very few exits. Largely exits have not been to strategic outposts, but actually companies going public. And since that market has been shut for the last 2 to 3 years, the industry has been going through a very tough time.
But is that a matter, if I just may ask a follow-up question, is it a matter of market that doesn't work, or is it a policy issue where markets can be deregulated to facilitate more IPOs?
No, absolutely. So I think the machinery of capital actually flowing into India from an investment perspective also needs to improve dramatically, right? If you look at sort of gross capital formation, or actually increase in capex of India Incorporated, which was running at about 20-25% growth per year, in the last few years has actually stalled to low single digits, and that needs to change. A lot of that will happen through capital markets flowing more efficiently. A lot can be done towards that. I think ability to do follow-on raises, as he was pointing out, the ability to actually go list. There are lots of, if you look at the liquidity statistics, the market liquidity is all restricted to the top 100 stocks, whereas we have over 3,000-4,000 stocks that are listed in India. So there's a long tail of companies that actually don't get followed, etc. So there's lots of inefficiency in the system that can actually be corrected. And I do expect the new government, as well as if you look over the next decade, there'll be a series of reforms that actually need to be taken to make this capital markets much more efficient.
I tend to agree with that view. I think the most important thing in capital markets is confidence. And one of the things that has started well for the new government is that he has made the Prime Minister has made the right announcements. So if there's an intention and there's a will, first, that is the most important thing, that you get confidence back in the market. That has been very evident. If you see the retail investor, for instance, has disappeared from the market in the last few years. They prefer to buy gold rather than come into the market. A lot of broad changes need to be made. How are pension systems working in India? What is the actual return people get? What is the protection that investors get? And that's in terms of more transparency. So there's a very long list of things to do but we've started in the right way, and getting confidence is the first thing. And once the approvals come through, I think the other very important thing is we only talk about equity capital markets. I think the formation of the debt capital markets is a very important aspect as well. That does need to be reflected. And generally, financial systems, how do we reduce the risk premium of India? Perceived risk premium, the real risk premium. These facts are known to the government. I think there are enough papers that have been written on these things. It's a question of actually getting things done now. So it's early days, but I think we're on the right path.
If I summarize what you all three said, it's like a mix of confidence building measures that are paramount to bring confidence investors back. The second is like also a mix of domestic measures and those that are outward looking. So do you see that India can't be looked at in isolation to reform the capital market, but it always has to have also a component that is attractive to foreign and investors abroad?
Yeah, absolutely. I mean, India needs to grow at say 9-10% to justify its potential and also provide jobs to the unemployed. I mean, we are getting almost 1 million youngsters into the job market every month, and so effectively India needs to attract as much capital as possible from within India. India saves quite a lot, around 35% of its GDP, but it's still not sufficient. And so whatever it can attract from abroad, it should attract and ensure that that capital which is coming from within India or abroad is able to get the right returns. And so effectively India has always, almost last 20-25 years, was looked up to attracting foreign capital as much as anything else.
I mean, things like, if you look at the savings that Ashish was referring to, 30-35% of GDP, but it's all going, as he was pointing out, in areas such as gold, etc. Bank deposits for 60% of all channelized savings. So we're not really able to attract that into either equity or debt, which are the two biggest productive uses of capital. Of
and why is this so? Is this a cultural thing, a traditional thing?
It's a cultural thing, but it's also a confidence thing. It's also a situation of last 10 years or last 7 years returns being very muted. If you look at Korea as it went through its transformation process, a lot of the pension money actually was allowed to invest into equities. That created a large market for investments in local investments, local pool of capital that could actually go and fund projects. In India's case, that has not been the case. LIC is a little bit, but as pension markets reform and you get more insurance money as well as pension money coming into equities, plus debt, can actually be a very long-term viable source of funding. Because foreign capital can be an additional factor, but cannot be the sole factor. You need a balance of both factors to actually play in and actually develop the capital markets to function in an efficient manner. So I think you need a combination of both, and I think there can be measures, regulatory measures on both sides, allowing more equity participation, more debt participation, and domestic side as well as being more facilitative towards foreign capital that can make it much more efficient.
To what extent do you think does the regulation need to be reduced to have those restricted sectors abolished, or the maximum share reduced as a factor to increase foreign direct investment into India?
See, foreign direct, as we keep saying, foreign direct investment is a function of having very clear idea that we have a policy, the policy is stable, and that policy will be executed. So if we have that sort of thing, then foreign direct investment will come in, because ultimately it's about confidence in people putting their money. I'm going to get a decent return on my money. So I think these are reforms. Government needs to focus on the key issues of governance. It shouldn't be in the business of running businesses. India needs to liberalize within itself. We are very hung up on foreign capital and foreign investment. It is necessary, but the large savings which has already been referred to is already there. That needs to be used more efficiently. Savers, today we are very fortunate that we have a young country, but still how our savings are, will be ready for us when we need it. They need to compound, they need to return for our investors, and that's how you get people saving and investing in the right way. If you have these fundamentals in place. So I think government should, reduce public sector businesses, let the internal market in India, even if it's run by Indians, thrive on its own, and that's just by good solid policies need to be there. That's it.
So I see here is a consensus what needs to be done next. So far, how I pursue the Indian politics, this is also the consensus of the new government. Still, this is the last question and my request for a short answer. Do you see still obstacles in the way that might hinder those reforms that you also brought to the table now?
There will be obstacles, undoubtedly, in execution of any plan. But I think the Prime Minister has indicated he's here for the long haul. And he is solutions driven, so I think we will see quite a few changes that people are hungry for change. They feel frustrated.
Mm-hmm.
So I think these are it's the early days, but we are hopeful that I mean, if people wouldn't have given such a big mandate. In the past few months we've had quite a lot of support for new parties on an anti-corruption agenda.
Mm-hmm.
So the process of reform has started, and we have to wait and see really.
There's clear hope, a clear mandate. First time in 30 years we have such a strong mandate. I think it comes with high expectations. The jury's out there. In India, we've always have this way of going 2 steps forward, 1 step backward. Hopefully, this time will be different. But as a private equity person trained to be skeptical, I think it's not that we're going to run into regulated industries to invest in day one. I think we're still going to stay invested in certain areas which are free from government and hope for the best.
Actually, so the jury is out. Who is the jury? Is it the public in general? Is it the business community, the financial community that would then 1 year ahead look and say this worked out and something was brought on the way, or it's still stuck?
No, all of them put together. I think the society is made up of many interests, and not only the business interests, because many times many of us may think that ultimately the governments and the society should work for the interests of the business, but then the society has different interests, and so they tend to have even political frameworks change for a period. But I think today all the vectors seem to have aligned in the positive direction, that all of them want to do the same thing, that is reduce corruption, reduce obstacles to investments, create more jobs. And I think whether it's private equity, whether it's private capital, whether it's private sector and public sector, all of them seem to be aligned to the same motivation. So I think it's a wonderful time to be investing in India, and I'm sure if obstacles come, they would be finding practical solutions to that.
Excellent. So, gentlemen, thank you very much. We all hope that the measures that you proposed will be brought on the way to get the India growth engine starting in the right direction. Thank you very much for your time.
Thank you.